Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 25th. Hope you guys have a wonderful morning thus far. And we got a few economic news to go over. Like every Thursday, we get the weekly jobless claims. So we'll start with that. Last week, we had 210,000 people apply for unemployment. That was also sample week, so that was an important week for data because it's going to be used as part of the calculations for the Bureau of Labor Statistics numbers next week when they provide us the jobs numbers for the month of October here. So that's an important one, and it's low, so it could lead to a very strong number or strong jobs reports. Forecast is supposed to keep it the same range at 210, but this last week, it came in at 215,000. Also on the agenda here, we got the durable goods orders for the month of September. We had a pretty good month here, as you can see, 4.6% for the month of August. So as a result, for September, the forecast was supposed to be a drop of 1.9%. Instead, it eked out a 0.8% gain in the month of September. So good news there. But when you strip out the big ticket items like transportation, which can really kind of manipulate the numbers here, we had in August a 0.2% drop, which, as you can see here, that 4.6 was due to big ticket items like transportation. But it also did the same thing in month of September. It dropped 0.1%. Last but not least, we see pending home sales. So we had a drop in pending home sales in the month of August of 1.9%, but September it turned around a little bit at 0.5% increase here. So obviously the rise of the interest rates is having an effect on sales of home prices. So we're seeing that kind of dwindle a little bit. Obviously, the good news is that home prices are still rising, but at a slower pace than what we've been seeing in the past here, and we're starting to see that kind of slow down a little bit. Let's kind of jump ahead here to the headline news. We got stock markets up for a change today. As I did this, the Dow was up around 250 this morning, and as I've been putting this together, actually it's been kind of dwindling down a little bit. So even one of them, I believe, S&P kind of went into negative territory. So it was getting a lot of steam early on, but now it's kind of losing that steam, and we may see a reversal here coming up here as we're presenting this here. As you know, we had the Q3 earnings reports. We've had some misses there, and we've had some hit. So, Tesla had one of their biggest ever reportings, and so that's kind of helping them out. But there's other people who are missing on there, and that's kind of with the thinking of the investors today. These misses are going to have more of exaggerated hits because they're looking at, with the higher interest rates rising, looking at a global level, that global growth, we may have peaked, and they're concerned that obviously we may be reversing, and some of these companies may not continue to grow as a result of it. So now they're going to be a little harder when they evaluate equities, especially when they see yields are as high as they are. They may just jump ship and take less risky investment into yields versus equities. We also had ECB gave their announcement today. They announced that they weren't going to change rates. There's no unchange in rates. They did confirm that they're going to continue with they're going to, after December, their QE, their bond buying program will be ending in December, so they won't be artificially trying to keep it low, keeping the cash flow going. But they did see that there might be a little bit of inflation over there, which obviously can be a concern over here because that could kind of drive over this in this direction here. But they are seeing a bit of inflation over there. And what we've been seeing is, we got some Fed speakers speaking today as well. We haven't had much impact. Nobody's come out and said something that was off the wall that would kind of throw the market in there. But they're out there. They're out there speaking, and it is possible that if somebody says something, especially a voting member, that perhaps the markets might catch their ear and might get a little bit more volatile. So let's jump ahead here, see what the bond market is doing. So right now we started a little bit lower, but since then we've been kind of rising, and right now we're up about +2 basis points. As the stock market was heating up earlier on, we were down here. So we were down earlier on in the morning, but as the stock market is kind of wearing its steam, steam's kind of dissipating, and it's kind of going towards unchanged to possibly negative levels. The bond market's kind of picked up a little bit, and now again it's up about 0.2 or 2 basis points right now. And we're kind of in this middle range here between the stochastic floor here, and we got our Fibonacci floor, and then we got this 25-day moving average here. So we got a little bit of room either direction here, but we are in a oversold position. So that could help us to see more positive than negative here. Also, S&P, I was looking at the chart there as well, and it's dropped quite a bit, and it's got, it's up against a new floor, a new ceiling, which used to be a pretty strong floor, but it's dropped below that, and it's got a long ways down before it hits another floor, and that could. So we're kind of mortgage-backed securities is taking its cue from equity markets. So if equity markets doing well, it's taking the money from mortgage-backed securities into equity markets. But as equity markets are kind of losing some of that momentum, they're putting that money into the bond market, which is helping out interest rates. And here's a 10-year Treasury. As you can see here, it's below the 25. It moved below the 25-day moving average. Is capped between this Fibonacci level here as well as the 25-day moving average, which is trying to break above it, but it's so far it hasn't succeeded. It's kind of hanging in at the 3.12 level here, and we'll kind of see if this gets continued to push lower as well, and see if it breaks below this level here. All right, so rates are about the same as what we left off yesterday, so that's obviously a good sign for those who are in the market for buying or refinancing. They don't worsen. So, but if you guys want to get any, if there's any changes or updates, I will post on Twitter. You can find me at Mike Bjork if you want to follow and check out those updates as I post them. Otherwise, you guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.